how do you think about the more recent drawdown and what it means for you?
Yeah, so let me just start with, I think it's important to zoom out whenever you're talking about crypto. We see volatility day to day, we see it week to week, month to month. But when you look over the last decade, Bitcoin has been the top performing asset against all asset classes. So we really focus on long-term trends. I think it's also important to note when you look at all past prior bull runs where you see price appreciation over a period of time, there's been intra-week, intraday, intra-month corrections to the price. And so Coinbase always prepares for all environments. We're prepared for the volatility. We've navigated this incredibly well over the last 10 years of our history. And it's just another day in crypto. It doesn't mean that the long term doesn't continue to be as rosy as it was last week.
Alesia, good morning. It's Ed in San Francisco. Just another day in crypto doesn't carry with Sonali and I because we have sleepless nights and never-ending days of crypto. I get that. The volatility is a driver, right? We understand that, particularly when you consider your customer base. But there must be a psychological or sentimental element of that as well. So if you take the news flow of late, spot Bitcoin ETF and the halving as examples of dominated headlines, do you see evidence that those headlines drive activity for you guys on the platform?
We absolutely see that crypto asset volatility and rising crypto prices drive activity on our platform. And so with the demand of Bitcoin ETFs, it's natural to see then price go up, natural to see elevated activity, as crypto has been very headline driven over the last decade. But what is so exciting to us is that we now have a material part of our revenue coming from non-trading activity. So we've been seeing growth in our subscription and services through the downturn of 2023, through Q1, where it was up 36%. We generated over $511 million of subscription and services. And we're really excited now for this next wave of crypto adoption on chain. So we're seeing the idea that we can now have Base as a layer 2, do faster and cheaper transactions, gives the foundation that we might be able to drive into payments. And so, yes, historically, speculative trading, very headline driven, but there's so much more to crypto than speculative trading, and we're excited about what we can deliver with the diversified revenue on our platform.
Alesia, I think a lot of people struggle to understand and conceptualize how much Base can really translate into future revenue for Coinbase. How big can it really get, and what does it mean for the future economics of Coinbase?
Thanks for the opportunity to talk about Base. So first I want to explain what Base is. Base is a layer 2 solution, which means that it's built as infrastructure on top of Ethereum, and it enables transactions to move more quickly, faster. What we saw is we now have 8 times the developers building on Base quarter over quarter. This is what we're driving. We're driving a platform for developers to build applications. When they build applications, they're looking for less friction, lower cost, faster speeds, and that is the environment that we're trying to create. We had a really exciting upgrade in the quarter where we were able to reduce transaction costs by 80%, often getting them lower than a penny. What that led to now in the last 30 days is that we're seeing 2x the number of transactions on Base than we do on Ethereum. Driving developer activity leads to driving transaction volume. Transaction volume leads to revenue. So the whole pipeline here of activity is trying to create that environment for developers, get the transactions, lead to revenue. We broke out a new revenue stream in Q1 called Other Transaction Revenue. Other transaction revenue is the Base sequencer fees and other payment-related fees. And so this really speaks to our ambition to grow these products and platforms. And investors will have that transparency now to look at it as we go forward.
Sonali, just let me have this one, okay? Alesia's the CFO of the company, so I'd like to ask about expenses. Alesia, I'd like to ask you about expenses. They're creeping up a little bit. And you're going to tell me, well, demand's going up. So, but how are you managing expenses? You can see the eye roll from Sonali that she's less than impressed, but I think it's important for investors.
So in Q1, expenses were up 5%. That was largely stock-based comp that we shared earlier in the year. But I'm going to focus on the future. So we are seeing expense growth in Q2. The vast majority of this is variable spend. So as I shared in our shareholder letter, when we see high volumes, which we saw a sharp tick up in volumes in March, we tend to then have a lagging effect to our customer support cost as we staff up those teams to address the queues that have resulted. So a little bit of that is spilling into Q2. We also will see higher infrastructure costs in Q2. The third expense that's going up is USDC rewards. USDC rewards are tied to activity on our platform. We doubled the USDC balances on our platform during the quarter, and that is what's driving this increased spends. All of these can be also ratcheted down quickly if we see a change in environment. But we're excited about the growth in expenses. It's not hard, sticky expenses. We learned our lessons hard in 2021 and 2022 when we grew too quickly. We will be prudently growing. We're looking for good ROI investments, and we really have a focus on the cost management and financial discipline.
Alesia, it's interesting because if you think about the currency market, it's like king dollar. But when it comes to the crypto market, it's king Bitcoin. And it is still the vast majority of what you see in trading. But when it comes to Base and the activity that's being brought in the world of meme coins, how do you think about that movement, if it's sustainable, and whether that's going to be where the bulk of activity lies for a while?
So there is some meme coin activity on Base, but I would focus you on, this is the creative content. This is part of the process. We are seeing really exciting new applications being built on Base, like in the areas of social, gaming, and I think this is just part of the journey to get there. I think, again, the key that I want to focus on is a platform that enables quick, fast transactions, just like we move from email to text, text to WhatsApp. Lower frictions will be the path of developer growth. And when we think about just the opportunity now to have USDC on Base, it's enabled global payments, nearly instant, nearly free, or very few cents per transaction. That is a new innovation that we're really excited to see how it is built and grow through our own product platform, through our wallet platform, through USDC growth, through sequencer fees, but also then for just other developers and companies that are looking to then adopt these lower cost rails.